Good morning, everybody. All right. Not too much happening this morning. After yesterday, a little quiet now. Time. Um, this area that we marked off a couple of days ago, S&Ps are just sitting there. And I guess we'll just wait now. I guess this debt thing is passed and we wait for some numbers for tomorrow and see whichever way the markets will go here today. And let's get some charts up here. My brains are still a little slow, guys. Whatever this thing is that hit me. Anyway, here we go. So remember, we marked off this area as kind of like being in between, and I think some open interest hanging there, some larger areas of open interest, and just kind of hung there, yesterday, give or take. And where they're at right now. See, they're just coming down into it. So not much going on. Just waiting. Kind of nauseating, this market this year just seems like, just every news event that's coming, market just hangs there waiting for that, and then something else and something else. And of course, just especially with the S&Ps, because it's been a market that where we know it's been going up, and it's all money going into those few tech stocks, but there's overlapping bars that we dealt with here for 6 weeks. And then the dip with the topping tail, and something like this normally would just rip higher, bar like that followed by a topping tail and just hanging here. It is what it is, right? So since that moved up above there, we got a pivot here. That's our new major support line. Shifted it up from here to here, and the deeper it comes into here, more bearish it becomes. And certainly if it closes below that, that's going to be bearish. No doubt about that. We'll see where it is by the end of the week. Right, so things are coming in here a little bit. Eyeballing where it is on that bar to look at SPX, which both sides were fine yesterday. Yes, look at the futures, just an inside bar. Nothing happening there at all. Yesterday talked about the slowing momentum, distance between the highs there. You can see how just, you got pivot highs and pivot lows in opposition of each other, and they're close together. That's just a picture that communicates indecision. And now as it did start to move up, immediately stalled after clearing that prior high. Not any real power there. That could change. SPX. This is actually a little bit more than 43. I think the average that I have now is around 40, 45, something like that, 45-ish, give or take. Yeah, what is Jake telling me? 41.30. I don't know if there's juice at 41.30 last I looked. Maybe, it is moving. Nothing there at 41.30, Jake. It's only 45 by 50 cents. I guess if you go there, yeah, I got 40. Yeah, we'll go at 41.40 and 42.20, and I got a side note of 25 written down that if things should flip up at the open, if it does it quick enough to go to 42.25. No. I mean, you see what, if it starts moving fast right at the open, those premiums will shift quick enough to where you can go a little higher or a little lower. But that's one of the kind of the key there. It's got to happen fast, because right away it's 0 DTE. They move fast no matter what. But what I'm going to get at is it can move fast and you can get further away there at the open, and then things kind of slow down and the time decay starts kicking in pretty fast. You know, and you can get out of it. You know, you don't have to hold it till the end of the day. Russ saying he has some at 41.35 here. Okay, so you know that's the area where we want to be. So when I put these lines here, it's about where it ended yesterday, and you know, with the average ranges, say over the last week, that gives a potential, hey, maybe it could go to there, and then seeing where the premium is, getting on the other side of what would be an extreme move, and that should be safe. You know, pretty basic stuff, but it's been working for a long time. All right, other markets. It's just flip-flopping around. It's near yesterday's close. Here, almost exactly at yesterday's close, so almost unchanged. Futures, you know, you can see it's kind of drifting down. You know, not bad. You know, we looking at this as a potential top. Tops, you know, buyers don't give things up so fast. They're a greedy bunch. I'll tell you. I mean, sometimes things come down fast, but you know, they just tend not to. That's why you get more retest kind of patterns or lower highs, sometimes a higher high before the real selling begins, and you know, with some momentum. You know, but this did create a void, kind of climactic, and you know, well, this exceeded this high. I don't have a symbol here for the NASDAQ composite. I should. I remember what it is. COMP Q or X. There we go. So, you know, broader amount of stocks there, and you can see it. This gapped up right to the prior pivot high from last. More stocks than, you know, the NASDAQ 100. Which we'll take a look at that. And you see that exceeded that prior high. And if those stocks that have been strong stay strong, maybe, you know, maybe it goes up, but we saw some pretty good selling in some of those names yesterday. All right. What a mess. What a giant mess. You know, just back and forth, back and forth, back and forth. Just terrible. That was the Russell 2000. That was the futures, and you can see here it's the ETF. You know, what a schizo thing. And transports look kind of the same. There's lots of overlapping bars, and you know, we talked about the converging moving averages that were here the other day. And you know, of course, we got these pivots and bars. And when the moving averages converge like that, it just means that nothing's happening, because you've what these moving averages are is that the blue is a 20, the green is a 50, and the red one's a 200. All simple. So as it drops off old data from the past and averages in current data, and moving averages come together, the message is nothing's happening. You know, and so we have some power bars up, and we got some not so powerful, some power bar down. Well, those were pretty powerful, down and then up and then up and down, and kind of coming to what might be an inflection point in the coming days, or I don't know, week or so, you know, with the almost at the end of this week. But something's got to give. And you know, I remember saying that about a week ago, and so far, kind of in the same spot, give or take. You know, the Dow mentioned, all of these wide range bars have failed. The bullish bars have failed. This is just kind of drifting its way down here. Yeah. DV Puck is saying moving averages flat, stay away from the chop. Right. right? We're looking at pictures, and certain pictures, when we understand them, communicate to us, go somewhere else, right? This isn't a good playground when it's that way. Either if you have pivot highs and pivot lows that are opposing each other, really relatively close together, or moving averages that are converging on top of each other, you're dealing with indecision, and it's going to be choppy. So, heed the message and don't get involved. All right. So just looking at the diamonds. Sometimes you get a little bit of a different picture here. There's a lot of stocks in here that are beaten down extreme in the Dow. A lot of these consumer staples. So, and some of them we were looking at. I mentioned they haven't turned around. Thinking like, okay, we're going to get, reversals that could be traded. Nike was one. It went down yesterday. This thing with these symbols. Believe me, it's down a whole bunch. Target was down. You can see that's kind of started to accelerate. Yesterday was a wide range bar. At some, they get climactic and you get a bounce. I think Starbucks mentioned that's holding a little bit better. So these aren't, for me, like swing trades, but if they get turned around, if the market's up on the day, they could be good day trades and the start of possibly some kind of 2-day, reversal. We'll see. Let's mentioning CRM, that one's getting taken out to the woodshed. So that's a pretty nasty gap down. Maybe Dan will talk about that. Dan, I mean, I think this might be something for a put spread if it's really juiced up, but that volatility crush situation, I don't know if it gaps down that big. If you look at it, if it gaps down that big, and maybe there's juice way down here to sell a credit spread, just an idea. You have ideas, then you got to go to the option table and check it out. All right, interest rates. What are they doing here? Pulling in a little bit more after their run up ahead of the debt, blah, 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 doing nothing, just in a, little trading range there, nothing going on. 30-year, that's coming in a little bit. And this thing with the interest rate. So I heard the guy on CNBC the other day, or maybe it was today or yesterday, I don't remember. Anyway, they watch that number of what the Fed's going to do, and it was like almost a no chance that they were going to do anything. Right? Pause. Then it went to a 70% probability they're going to raise interest rates, and like a day or two later, it was like back to like 30% maybe that they're going to pause. And it's kind of crazy, it's part of what that's going on in this market and the indecision about what's going to happen, what's the next shoe to drop. And as I look at a chart like this that's just holding up here like that, it's like they're going to raise interest rates. This would start coming down, and it's not. And then you have different Fed people saying, "Oh, I mean, it's you wonder what are they doing? These Fed guys coming out and talking in the middle of the day and throwing out, oh, I think we'll pause, or oh, no reason to pause. Are they trying to make everybody crazy? What is their purpose? They're not serving a purpose, coming out with their ideas in opposition of each other. But crazy times. Bitcoin's a mess here. I mean, it's still consolidating the gain. I don't know. It's just a big mess. Oil's down a little bit, retesting these lows the third time down here. This is going to be interesting to see whether it flips back up here or whether it breaks lower. It's it's a pretty important spot, as you can see right here, for crude oil to hold these levels. It's got a big void down below there if it starts to break. So we'll see what happens today. It just looks like it's going to be maybe a seesaw day. And we'll see whatever numbers come tomorrow. All yours, Dan.
Yesterday was sure seesaw. It was a boring trading day. Let's look at earnings like always. On my ETF 15-minute sectors, I see Clow breaking out here. Look at this. Top of the range though. Earnings, cream, Greg mentioned. We were considering last night a short strangle, the 275 calls, and I think it was the 190 or 185 puts. So even with the gap down, it would have worked. But I didn't do any earnings trades myself. But yeah, when it's a real company getting whacked, gapping near this prior low, we just put it in a window and see what happens. I don't know if buyers are going to step up. Like, look at HPE yesterday. Buyers stepped up on that gap. Or if it's going to continue to sell off and get nasty, like, shoot, it's in here somewhere. Here it is, AAP. So look at this gap yesterday. I was watching it all day. The buyer's going to step up, and the answer was heck no. Look at that volume, closing at the low, gapping down. That thing is damaged. But something like Target, I've been saying the last couple of days, that is such a power lower low, lower high bar. Now it's gapping down. It will reverse one of these days, so they'll give us an opportunity. If it were gapping down to like 125 instead of 129, then I'd be all over this for a 30-minute high. That's what we call a gap and snap. I'm assuming it's gapping down here more on Dollar General. So that's getting whacked pretty good too. I'm going to watch it and see if and where buyers step up. Dollar General. Okta. I put in this middle chart here, getting whacked also. Look at the size of that gap. Now there's no question that these are nasty gaps and that the daily chart is damaged. But I'm just not, it's not in my head to want to short this. Unless you get an intraday setup for day trading. So if it bounces like that HPE did yesterday, then that's my bias would be a one-day DTE for tomorrow. Put spread. Yeah, this one's already on my list. Let me add it here. I added a few to this. Well, I posted it, on my credit spread watch, but yeah, cost is on there. VEEV gap into 181, excessive gap. There's nothing to do. JWN gapping up here. Bottoming pattern, but over 30-minute high. Put spread idea. NTAP. That was an ugly bar into earnings. Now it's gapping up to 70. Wow. That's what's called a bull island reversal. The problem is we like island reversals from consolidation. There's absolutely nothing to do here. In fact, if you wanted me to, I have absolutely no bias on that. I'm going to delete you. Crowd. Another one, gapping down, ugly gap. We just got to come back to it and see where buyers step up. Chewy, this is I call this a pro gap. If it holds, if this takes out the 30-minute high, I call it a pro gap because it's a downtrend. It's gapping over many areas of resistance, and it'll turn this into a bottoming pattern. So 30-minute high, I like that. This one's not earnings, but another bottoming pattern, nice little gapper here. So a little bit similar. This can get over a 30-minute high. Then looks like a short-term bottom on Mitch. Postage. It's, I'd just be selling this. It's had such a big run. If you were in it, I'm not. This opening flat, no pattern, you're going. PVH. Need more volume, but trading range, nothing to do. AI, we were very, very tempted to sell these $60 calls into earnings just because it's run too much. And I think this whole AI thing is a short-term bubble myself. It's just, this chart says, you went from $13 to 43. Don't you think there's some fraud built into that? So it's still a call spread idea, but the problem is that's a horrible place to put on a call spread. So that's why I have no idea what to do with that. Don't like these overlapping bars. You're gone. Visco. All right, so this one could be a gap and snap. This is a climactic buy setup. Look at the volume. They were dumping that into earnings. Chewing. I'm going to put that in a window. Visco. I don't like these overlapping bars, the way it trades. You're gone. Curdo opening flat, no pattern. NGL. 30-minute high. 30-minute high. Today's Thursday. Tuesday's gap reversal on support. I like. Has a void. So we'll come back to that. Little penny stock bottoming pattern, gapping down. Hurl gapping up 39.40, no pattern. Billing, that's just an ugly downtrend, daily, weekly, sell setup monthly. It's gapping down, but that's not a pattern I'd want to fade. So Macy's, I gave this as a short in the green trading room yesterday. It was a 1, 2, 3. Triggered right at the market open. I didn't know it had earnings at the time, so we just made it a day trade. But now it's gapping down on horrible guidance. But the fact that you got a wide range igniting bar at $12, that's showing tremendous demand at that level. So we'll come back to it. Could be a $12 put spread for tomorrow. I remember this one. I said if this opens flat after earnings, then we're going to short the low. So I'm going to set an alarm here at 2290. I always set my alarms early. So yeah, the House got that bill passed. Cal, I'm going to keep this on my list as a climactic buy setup, but there's absolutely no turn yet. There's a lot of stocks like that are just beaten down but can't turn. Look at Florida here, FL, Foot Locker. This is a great example of that is not a potent reversal. So remember, these are counter trend trades. So it's all about what information do I have to suggest that it's going to bounce. And you need a potent reversal. We're going to have an MT live on this subject in a couple of weeks. So that's a good example that that I will show of this is not what we're looking for. Con gapping down, $4 stock, no interest. All right, those are all the earnings. These are just some leftover things. XLU's a put spread idea. And I say that's a CLIMO. That's a CLIMO with a 3-bar turn on major support. So you see how this is a substantially different. All right, Greg, I see PD look here. Substantially different CLIMO than these others. Here, let me write a couple of these down real quick so I can look at them. Target, let's see, I'll look at them for the MT live coming on. PD look, NVIDIA bubble burst. If it cracks 378, then it has room to fall. Well, see these overlapping bars here to the left? That is telling me if you drop down to an hourly chart, that there's going to be all kinds of bumpy support pivots over there. So the point I'm making is, I do not think it's a clean void. This is a void, yes. But ideally, you want it to chop around another 2 days and show that it cannot bounce, and then let it crack the low of the recent consolidation. So I hope that makes sense. SRE. Yeah, that's ugly. Look, Southeast. This one's another one I just typed on my list. It's a CLIMO, right? It's we define things. Here's a dog. It has 4 legs, it has a tail, it does this. Okay, so it's a dog. So now my analysis is, okay, well, do I want to take this dog home? No, it's not a quality dog. So that there's no turn there. Merck was a client. See, now there's a potent reversal. It's a gap engulfing. So that's a 2-bar reversal, CLIMO. Took out prior pivot low. But if it takes out yesterday's high, it could churn its way up to the 50 MA perhaps. It's not. SLV was another form of CLIMO, not a clean one because it went sideways and then broke down, but that fits in the CLIMO turn category. That's why I have that as a put spread idea. All right, this mix here I mentioned. That's a nice little gap trade there. Gap setup with the pattern. I don't like trading the first 5 minutes, number one. Number two, the broader market's not giving me any bias, so I'm not rushing into anything. But that's a nice little gap bottoming pattern. If it can take out the 5 minute high, and then let's go look at a put spread. A BHC alarm. That's kind of a little buy setup, cup and handle. Let me just set a new alarm at 8:30, just so I don't have to worry about it right now. $8:29 new alarm. I had it at 8.25. All right, so Chewy is also off to the races, but see, now that I see the gap in the prior high, the gap's too big. All right, Visco I mentioned, gap and snap candidate, but it is way too early to make any decisions on that. Cream is not bouncing, Dollar General is not bouncing. Oh, I was gonna say, that doesn't look right. And that's because look, there's something's weird here. Maybe the specialist is not open for business yet. Because I think the specialist has not begun printing. And that's just a little archive print of some sort. But that is one. All right, now, see, you see what I mean, you all? Now I can tell that the specialist is open. Do y'all see the difference there? It took him 2 minutes, over 2 minutes to open. All right, we got 2 shorts here, low alarms going off, Fiverr. We have a bear put debit spread. This is beautiful daily, weekly, monthly alignment. So we have a nice put spread. Spy, wow, look at a 5-minute wide range bars of the Horseman. You see why I wait 5 minutes? It's just in my trading plan, unless it's such a delicious, gap trade where I would even consider trading pre-market. I just wait 5 minutes. We had 6.5 hours. There's noise at the open, noise. So even though something might look good in 2 minutes, it very well cannot look like that in 4 minutes. Today being exhibit A.
Target and Nike gap down. You would think possibly exhaustion gaps, but there's no turnaround yet at all.
Yeah, they're both on my list. I've been watching Target for a week. All right, look at our XRT. Low alarm. This is our only short in the ETF letter. Spartan, low alarm, SPTN. Man, look at this pain on DG. Ouch. Ouchie. All right, what did I say? Spartan. Ah, this is the one I said, you all. I said short yesterday's low. But by the size of that bar, that might have been hard to get on board. Yeah, 14,000 volume. That looks like it just friggin' the bid dropped. But that was a quality short.